What's going on, guys? It's your boy Tyler bringing you fundamental news on Wednesday, the 10th of May. Today's article is brought to you by investing.com. Asia FX was muted. Dollar steadies as inflation data looms. Most Asian currencies moved in a flat to low range on Wednesday, while the dollar steadied amid caution before the US key inflation. Data due later in the day, while concerns over a sluggish economic recovery in China continue to weigh. The Chinese yuan fell 0.1%, inching closer towards the 7 level against the dollar as softer than expected imports data from the country raised questions over the stability of a post-COVID economic rebound. China's exports also grew at a slower pace in April, pointing to continued pressure on the manufacturing sector as it grapples with weak overseas demand. Markets are now awaiting Chinese inflation data for April, due on Thursday, for any signs of a pickup in local spending. Concerns over China weighed on other currencies with trade exposure to the country. South Korea's won rose 0.1%, while the Taiwan dollar and the Singapore dollar traded sideways. Risk-heavy Southeast Asian currencies retreated slightly, with the Philippine peso and the Malaysian ringgit down 0.1% each. The Australian dollar rose 0.1%, rising for 7 of the past 8 sessions after a surprise interest rate hike by the Reserve Bank earlier this month. The Japanese yen fell 0.1%, extending losses into a further straight session as expectations of dovish local monetary policy largely offset some safe haven demand for the currency. Broader Asian currencies moved little, while the dollar steadied after 2 days of gains as markets hunkered down before US consumer price index inflation data due later in the day. The dollar index and the dollar index futures both moved less than 1% in either direction on Wednesday. Wednesday's reading is expected to show that while inflation eased further in April, it is expected to read well above the Federal Reserve's target range. Wow, guys, that statement or that line, it says it all. Inflation eased, meaning when inflation eases, we can expect a weaker dollar because it means the central bank is gonna start decreasing rates since inflation is easing towards 2%. Anyway, while the central bank is expected to keep its rate hike cycle on pause in the coming months, traders have been trimming their expectations for any interest rate cuts this year, following signs of strength in the jobs market. Fed funds futures prices show that markets are pricing in nearly 78% chance that the Fed will keep rates on hold in June, as well as 55% chance of a hold in July. The Fed has also largely downplayed any expectations for a rate cut this year. There you have it, guys. Don't forget to like and subscribe for more fundamental news.